Over the last 90 years, the S&P 500 index has not only mirrored the growth of America's largest companies but also offered investors an average annual return of about 10%. In just 20 years, a $100 monthly investment in the S&P 500 could grow to over $60,000. This remarkable performance makes it a compelling choice for anyone looking to tap into the potential of the U.S. stock market. In a world where investing often seems complex and intimidating, there's one investment in 2024 that stands out for its simplicity and effectiveness: the Vanguard S&P 500 ETF, known as VOO. Imagine having a single investment that gives you a stake in 500 of the largest, most successful companies in the United States. This is what VOO offers. It's not just an ETF, it's a ticket to participating in the American corporate landscape, a landscape filled with innovation, resilience, and growth. Today, we're going to explore why VOO is the ideal choice for beginners looking to make their mark in the stock market this year. VOO, a snapshot of the American economy. VOO offers investors a comprehensive view of the U.S. stock market by tracking the S&P 500 index. This index is a benchmark for U.S. equities, representing a broad spectrum of industries and company sizes. From tech giants to healthcare leaders, VOO provides exposure to a diverse range of sectors, making it a microcosm of the American economy. This diversity is crucial for investors seeking balanced exposure without the need to analyze and invest in individual stocks. Why the S&P 500? The S&P 500 is renowned for its stability and growth potential, making it a popular choice for investors worldwide. Historically, it has provided solid returns, with VOO mirroring this performance. Investing in VOO means you're tapping into the collective success of America's largest and most influential companies. It's a strategy that offers both the potential for capital appreciation and a degree of risk mitigation, given the index's diversified nature. For beginners, VOO simplifies the investment process. Its single fund approach means you can gain broad market exposure without the complexity of managing multiple stocks or funds. Additionally, VOO's low expense ratio of 0.03% makes it a cost-effective option, ensuring more of your investment goes towards growing your wealth, not covering fees. In this first part, we've introduced VOO and its connection to the S&P 500, highlighting the benefits of its comprehensive market coverage and the simplicity it offers to beginner investors. Diving deeper into the Vanguard S&P 500 ETF, we uncover the multitude of benefits it offers, especially for those new to investing. VOO isn't just a gateway to the top companies in the US. It's a well-crafted tool designed to optimize your investment experience. VOO's performance is a direct reflection of the S&P 500's track record. Historically, the S&P 500 has delivered robust returns over the long term. For instance, as of the latest data, VOO has shown a 5-year annualized return of around 10.7% and a 10-year annualized return of approximately 13.6%. These figures illustrate the fund's potential for significant growth, making it an attractive option for long-term investors. In case you didn't know, hitting like on this video might just be the lucky charm your portfolio needs to grow. And don't forget to subscribe for more exciting financial topics. Together, let's navigate the world of investing and turn knowledge into wealth. One of the standout features of VOO is its remarkably low expense ratio of 0.03%. This means that for every $1,000 invested, only 30 cents goes towards annual fund management fees. This low cost is crucial for maximizing returns, particularly for beginners who are starting with smaller investment amounts. Lower fees mean more of your money remains invested and can grow over time. Investing in VOO offers a level of diversification that is hard to achieve with individual stock investments. By holding shares in VOO, you're effectively investing in 500 different companies across various sectors. This diversification helps spread risk, as your investment is not overly reliant on the performance of a single company or industry. In volatile market conditions, this can provide a buffer against significant losses. VOO's structure as an ETF makes it highly accessible and convenient for investors. It can be bought and sold like any individual stock, offering flexibility and ease of trading. This accessibility is particularly beneficial for beginners, allowing them to easily adjust their investment as their financial goals evolve. In this part, we've explored the key benefits of investing in VOO, including its strong performance, low expense ratio, diversification, and accessibility. These factors combine to make VOO an ideal investment choice for those starting their journey in the stock market. Having explored the benefits and dividends of VOO, let's now turn our attention to how you can start investing in this ETF and effectively manage your portfolio. Investing in VOO is straightforward, making it ideal for beginners. You can purchase VOO shares through most brokerage accounts, just like buying individual stocks. With a $100 monthly investment, you can steadily build your holdings in VOO over time. This approach is particularly beneficial for those who prefer a set-and-forget strategy, allowing your investment to grow with minimal intervention. To grasp the potential growth of a $100 monthly investment in VOO, let's apply its historical average return of approximately 10.7%. Investing $100 monthly over 20 years totals an investment of $24,000. However, considering the compound effect of the average annual return, the future value of this investment could reach approximately $62,164. This substantial growth, far exceeding the initial contributions, highlights the power of consistent investing and the compounding returns in a high-performing ETF like VOO. While investing in VOO offers simplicity, effective portfolio management is still key. This involves regularly reviewing your investment to ensure it aligns with your financial goals and risk tolerance. As your financial situation or goals change, you might consider adjusting your investment strategy, such as increasing your monthly contributions or diversifying with other investment types. A critical aspect of investing in VOO or any long-term investment is consistency and patience. The stock market can be volatile in the short term, but historically it has trended upwards over the long term. Regularly investing in VOO and holding your investment through market ups and downs can be a sound strategy for building wealth over time. In this part, we've covered how to start investing in VOO and the importance of portfolio management and a consistent investment approach. For those just starting, VOO presents an opportunity to grow your wealth alongside some of the most significant and influential companies in the U.S. It's a step towards building a more secure financial future and understanding the broader dynamics of the stock market. Remember, the journey of investing is as important as the destination. Start small, stay consistent, and keep learning. Your financial future is in your hands.